Many of our parents, especially those who are retired or nearing retirement, have the habit of keeping large sums of money in their bank accounts. Well, this may feel safe, but actually it's not the best financial move. Today, let's talk about why you should encourage your parents to invest in a money market fund account instead of just leaving the money idle or lying in the bank. First and foremost, let's start with the problem of keeping money in the bank. Banks are great for daily transactions, but they do not grow money. In fact, most of the savings or most of the fixed deposit accounts offer a very low interest rates. Compared to the inflation rates, it becomes very low. So that is why I tell people keeping money in the bank is not the best and ideal choice. But for most of our retired parents, that is the way they do it, and that is how they have known for the longest to do it, just saving and putting money in the bank. Why do I talk about money market funds account being the better option than keeping money in the bank? Number one, for a money market fund account, it earns a high interest rates compared to the fixed deposits that are in the banks. You find like a bank is giving around 5%. You find that a fund manager is giving around 10 to 12%. You see, that's almost a double of what the banks are offering. So why should your parents' money just stay in bank accounts? Talk about liquidity. Your parent might ask you, will I be able to access my money? When I go to the bank, I just transact and I can access that money easily. The same goes with a money market fund account. For liquidity, you can make it, they can withdraw anytime they want. If an emergency pops up, they can be able to access that money. The other thing is it has a low risk, because where most of these fund managers invest their money, it's very reliable and very safe. The only difference is it will make a higher interest rates compared to the ones that are in the bank. The other thing is some of our parents really like doing it on fixed deposit. A fixed deposit, if you're doing it for like 3 months, emergencies pop up like after 2 months. You see, if you want to withdraw that money, they forfeit all the interest that has accrued within that 2 months because they were supposed to withdraw after 3 months. While on the other side, for money market, you wanted to maybe fix that money for like 6 months. You don't have like a timeline to withdraw that amount of money. And if that emergency pop up for your parent, they can be able to withdraw their money and at the same time enjoy that interest rates. Then the other thing that I can say is these interest rates are gazetted on a daily basis. So today, the earnings for today will be the principal earnings for tomorrow, and they can be able to see the interest rates that the monies are making by looking on the gazette, which they always get gazetted on a daily basis. Let me address on the common concerns. Most of our parents have they worry about the risk, or rather, if I invest my money, might it be too risk? The good news is for money markets, they are designed to be very safe and to have very low risk. They are easy to set up, and your parents can withdraw their money anytime, just like the bank, but with better returns. If you would want us to help you create a money market account for your parents, please contact us and don't hesitate. We'll help your parent set up these accounts. We work with different fund managers, so trust you me, any fund manager that you would want us to help you in setting up these accounts, we will be able to give you guidance on the requirements that are needed to set up these accounts. The thing I would just want us to encourage is to tell our parents, to inform them that putting money in the bank is not ideal. It's easier to put them in a money market fund account. And how do you get started? How does your parent get started? I'll explain. Like I explained earlier, we help create these accounts, but I think the first step is explain to them that they don't have to invest everything. They can just even start small and see the benefit. Maybe invest like just a small amount, give it 3 months, see the growth that it has done, compared to leaving it in the bank, or vis-a-vis the bank, what they would have gotten if they had invested that money in the bank. Show them how interest rates are, and or how they can reinvest, so that they can understand how their money is growing. I have an example. If your parent has retired, they still have siblings, or your siblings are still going to school, do you know what the money they got from retirement they can put in a money market fund account? Let's do it practically. Maybe they got 2 million. They can put that 2 million in a money market fund account. If a fund manager is even giving a minimum of maybe 10%, that 10% is around 240,000 at the end of the year. So the 240,000, maybe your sibling is in school. That school, maybe they are paying school fees of 50,000 a term. You see, and a year has 3 terms, so that is around 150,000. You see, your parent will be able to enjoy the buffer of the 2 million, at the same time be able to sort out your siblings' school fees, and at the same time remain with some interest on top. So let us encourage our parents to at least open money market accounts, and you can do this through Japesh Financial Solutions. Our parents work so hard for their money, and well, we should help them make the most of it, instead of just letting their savings, their sweat just sit in their bank where they barely grow any interest. So let us encourage them, invest in a money market fund account. In this way, they can enjoy better returns while keeping their money safe and accessible. If you find this helpful, please share it with someone who needs to hear it. And if you would want us to help you in creating an account for your parents, or you would want us to help you talk to your parents in regards to money market, please comment below or contact us at 0743 000 222, or you can DM us on our social media platforms at Japesh Financial Solutions. Thank you so much.